welcome. And today on my show is Derek Allen, Tax Talks. You may have remembered some months ago we talked about taxes. Welcome, Derek.
Thank you very much for having me.
Go ahead. I'm excited.
Well, you know, this is the end of the tax filing season for individuals. I'm so glad to have it over. And now we're getting ready to talk about tax planning. So if you haven't filed or everything is just about done, but right now we're talking about what can you do for next year to decrease the amount of tax that you're going to owe for 2014, because 2013, over.
Okay, so you're going to tell us today how we can pay less tax?
Well, I can talk to you about some strategies that you could put into place,
Okay.
but one of the things that I just want people to be aware of in my practice is that plan for today and think of what's going to happen tomorrow. And that's all based on an individual kind of perspective. Let's say you have a home, you have a retirement account. When do you want to retire? When are you going to start planning for retirement? You're going to start thinking about it today, but you're going to talk about it tomorrow.
So when should we start thinking about it, or when should we start planning for it?
Well, you should start planning for it now. I'm thinking something like you're building a foundation. If you look like it's a triangle, so you're building your base of everything that's going to be income productive for you. So you just go out and make as much money as you can. You start with your education, of course. And then if it's not an education that is a college education, but some type of vocation, that's something that you're going to enjoy, that's going to be making money, that's going to be income productive for you for the rest of your life. And then what are the tax ramifications on that? How can you decrease that tax? Well, I'm going to buy a personal residence instead of renting an apartment. I'm perhaps going to buy some rental property that's going to earn equity. And then by the time I get to be about, some people are retiring at 55, some people are retiring at 65, and some people are retiring later. But then you have more things of an option for you to consider for retirement planning. But the thing for you to do now are the things that you can do to decrease your taxable income by December 31st of 2013 with the return due in 2014.
So you said purchasing a home and doing some things. What about people that have been self-employed and haven't put money into all of these wonderful 401ks and all these other things, and at age 50 they decided, I haven't saved any money and Social Security is not gonna, take care of me. So, the little tax money that I get back is very minimal. And what do you say to those people? I mean,
well, the self-employed individual has a double-edged sword to it, because normally you're not reporting that much of a profit. Your expenses are just about breaking even with your income, and it's really dependent upon what type of career that you have. So you're not going to really have the records to support a real estate loan as you would a W-2, and I found that with a lot of my self-employed clients that they run into that. But you can start looking at buying properties from some non-conventional methods, some foreclosures. If you're self-employed, you might come up with a bunch of cash. You might be able to get a fixer-upper and get something in a demolished area or impoverished area and then build your own equity that way. So there's some other unconventional methods that the self-employed person can look at to do real estate acquisitions.
I'm thinking there are, even me, I've been in the nonprofit sector for many, many years, and then I have been self-employed for more years than I care to remember. And I just remember that when I started out, I was young and not a serious business plan, not any of that, and not, putting money away or doing the things that I needed to do. And now at 25.
That's right. That's what I'm saying. You're 25.
At 25, I am thinking I need to do. Juanetta, you need to. Rick, you need to start. Doing some things. So, what would you say, Derek, to someone that's my age and has just pretty much just blown all their money on trips and stuff like that. And, and it's like, because we know that Social Security is not as, that's a joke. I can't even take a trip on Social Security.
I hear you when you're talking about Social Security was never really designed for you to live for the rest of your life. It was really to be something that was assisting you.
Okay.
Again, it just goes back to income productivity, just being as income productive as you can. What different methods of income can you produce being an independent contractor where you're getting a 1099? Maybe you are doing consulting, maybe you're writing books, maybe you're doing speaking engagements. So there are a lot of different things that the thought process is about income productivity. Just get on that train, ride it, and make as much money as you can. And there's not too much difference between the employee and the independent contractor because you're actually working more hours, as you know, as an independent person than you are. It's just not a 9 to 5, it's like
Right.
a 9 to 9.
Right, absolutely.
And so if your billable hours are a little bit higher, so maybe you're going to generate a little bit more income to set aside into some savings. There's some retirement plans available for self-employed people that you can establish. But the best thing you can do is to have a good banking relationship. Pay your credit cards on time, keep your FICO score intact. All of those things really are just different components about buying real estate. But that's not as exciting as about how you can pay the least amount of tax.
Yeah,
you know.
absolutely. Yeah, and see, you said something key because you always hear, and even I've made this mistake, is I don't want to pay taxes. How do I keep from paying taxes?
Why is it that you don't want to pay taxes?
No. I'm just saying that's what it's like. I want you to get all my deductibles. I want you to get all of this stuff because I don't want to pay taxes. But that's really not what you need. What you need to say is just what you said. How do I pay the least amount of tax?
Exactly.
But we don't think. Every year I'm telling my tax person, look, give me all my deductions. I got this. You know what I'm saying? And I keep this big shoebox of receipts and things, and it's like, here's everything.
Okay.
So and in my mind it's like I don't want to pay, but it's really not that, because you know what I'm saying, you need to pay the least. You got to pay. You don't get away from that.
Sure.
But the least amount is really what we need to be focused on. The least amount of money, because Warren Buffett pays taxes, Bill Gates pays taxes. They all pay taxes. They just pay the least amount of taxes.
Well, they pay the least amount of taxes prescribed by law, and whether you're a billionaire, a millionaire, or a thousandaire, you're going to pay taxes based on the prescribed limits of the law. So that's where tax planning comes into play. And it's very important regardless of how much money that you make. It's very key. I bought my first house, I was 23 years old. I didn't think many of my friends were buying real estate. I bought a piece of property in an inner city area that was not inexpensive versus the marina, where my friends were renting apartments. I don't have a yacht, I didn't have a boat, but I bought where I could afford, and then, that property did not appreciate in value as fast as other areas, but there's plenty of opportunities out there to do that. The other thing too, I think that we need to be cognizant of is that if you're making the money, to set aside amounts to make payments for your taxes. It's just not based upon your expenses, and no one's doing the shoe boxes anymore. So record keeping is important,
Okay.
Planning is important, and if you do it every month, it makes it easier for you to look at a budget. It looks at you to look at the variance between, let's say I want to make $1 million this year. I only made $500,000 in June. What is it that I've got to do by December to make that $1 million? You know what you have to do to go out to do that money. That same type of ideology is about, how do I pay the least amount of tax? What are my expenditures? Or do I have capital equipment? What are my deductions? What am I doing to deduct? Am I making the money to set aside for some retirement? All of those things are key, and they're important, just like you're playing chess, just like you're playing dominoes, just like you're playing bid whist or bridge. But it's this thing called life, and it's a big thing. Death and taxes.
So are you doing classes? Because the information that you're giving out is pretty invaluable. I'm thinking, are you doing workshops? Are you?
Well, I'm preparing for some workshops, but right now I'm putting together a student learning objective to go to the community college level to teach about taxes and about the different types of entities. Do you want to be a sole proprietor? Do you want to be, the differences between a sole proprietorship, a partnership, an LLC, a C Corp, a S Corp, and then we can even talk about the exempt organizations. But that's just making the decision about the type of entity that you want to be. But that's still, everyone has the same charge. Everyone has the same responsibility. Income production. Make as much as you can.
It sounds good. It sounds good. Make as much as you can. I think for me, when you say set aside some money for those things, because I'm not a credit card person. I don't do well with credit cards, and for me, it's like no credit cards. I mean, I have people calling me all like credit. It's like no, and no. Been there, done that, and it just was not a good thing.
Well, credit cards are another part of the component that is the structure for you to be establishing credit. This is something that's going to improve your FICO score. This is something that's going to be able to show to a bank or a lender that you're credit worthy. So one credit card that you're making payments on time is something that's actually good for you to have.
I think I live with the Dave Ramsey thing.
I don't know who Dave Ramsey is. I'm thinking of my great grandfather with the money under the mattress and then buried in the yard, We've got brand new days going on right now.
All I can think about, and when they talk about the depression and all that, it's like, okay, I wasn't there, but I remember the panic look. I remember when my grandmother was talking to me about it. I remember her whole face. I remember, it was like, you don't ever want to, Rick, you don't ever want to go through that. And then my girlfriend, who was the tax person, she's dead now, but I remember her telling me, we're in a depression now. I was like, kidding me? Because I kept looking for the little white stockings rolled up and the little black hat and the little shabby little coat and standing in the food line. But it's the same thing,
There's, some of my parents said you're always 2 paychecks away from being homeless.
Right.
There are different components of what the depression is, but again, this portfolio. You've got your cash, you've got your credit, you've got your real estate holdings, and you've got your investments. So again, if you're building this whole financial picture, this whole tax scenario, but it all gets back to income productivity. You don't want to pay cash for everything. You're going to have cash, you're going to pay for a car, you're going to pay for a house?
I mean, that's what I'd like to do.
Well, you're going to have millions and millions and millions of dollars for that. But, there's different strategies
We got
to
a
do all of
commercial.
that.
We got a commercial. We'll be back in 2 minutes.
Checking your fantasy league?
Nah, just my 401k statement.
I can't seem to save anything.
I got a pizza for a Todd.
Hey, can somebody spot me?
When it comes to financial stability, don't get left behind. Get tools and tips for saving at feedthepig.org.
And we're back. Listen, and I have Derek Allen with me, Tax Talks, and we're talking about financial planning. We're talking about what to do and what not to do, and taxes and all that. And listen, why have you here publicly? Derek and I were talking about some businesses a few months ago, and he kept saying to me, you need to get your picture taken, you need to get your picture taken. I was like, no. And I know he was thinking, well, gosh, you do a show, but no picture. And let me tell you what I am of the opinion, and it's probably just really crazy, but this was my thought. It was like, if they don't know what you look like, they cannot judge you, they cannot do any of that, they just have to go on what it is that you do. And if they hear or see or read who you are and they don't see you, they can't make a judgment. Since then, I mean, everyone I know, including you, everybody has their picture on everything, cards, everything. I mean, you get on the internet, everything. So I just wanted to say that you were right.
Okay, all right. And I want to say that you're still beautiful. I'll go every place with you.
I can't, I'm telling you, Derek, it was just like, I said, and I told my girlfriend, I said, this is what Derek was saying. Everybody's got their picture on everything.
Well, I don't
It's so
know.
much
I
money.
don't know if it's about, I'm a little shy and a little
Yeah.
hesitant myself as well as being private. I think it brings the personal touch. And if you're going to be prejudicial, am I saying that correct?
Prejudice?
Prejudiced about how I look, then I don't want to do business with you.
Yeah.
But I'm thinking,
yeah.
I think it's a more personal touch, and then you know who it is that you're going to meet. And when you're doing taxes and you're representing someone with the Internal Revenue Service, I've seen the gambit of people from lots and lots and lots of money, and people with not so much money. So it's not about just the look, but it's also about what you know. And it
Yeah.
kind of gives you that personal connection. You don't want to, it's like a doctor. You want to see the doctor. You want to see the attorney. You want to hear about them, but you eventually want to see them. But I understand there's a separation between I wouldn't make a decision solely without seeing and speaking with someone.
Really?
Yeah.
And in my mind, when I'm doing business with someone, it's like I really don't care what they look like, as long as they know what they're talking about.
Well, yeah, but I need to see you.
Yeah.
I need to see you before.
But
I'm
you know
not.
what that is? That's that young social
I don't know if
media.
it's
No,
about
that's
that
young.
young. I don't-
No, that's young. That's just young thinking, because that's the way they are. I mean, you guys, I mean, social media is like, I mean, everything is, they see it. You know what I mean? There's no personal, really, I mean, everything is social media. I mean, everything is social media.
Okay. Well, I just know there are
It's
a lot
just
of
young.
there's a lot of scams that are going on out there that, in terms of sign here or give me your information over the phone and you owe the IRS, and if you don't pay me right now, I'm going to take your house, take your car. And that's not someone that you see, that's just someone that's calling you. So there's just a lot to be said. I think it's giving you that warm and fuzzy kind of, for me it gives you some type of connection, but it also kind of, that's the person that I saw, hold you accountable. You have evidence.
Oh, that's that IRS background.
Just a little, just a little, just a little.
Okay,
just a little.
let's talk about the taxing. Let's talk about how to prepare. What are we talking about? Prepare, come on.
Well, we're talking right now what it is that you can do before the end of the year, this
Yes.
year, to decrease the amount of taxes that you owe. So if you're an employee, you can start looking at some things such as adjusting your W-4, having more money withheld from your paycheck right now so you won't owe. But you already know based on your W-4 that you've submitted about the numbers of exemptions. So you want to do a match that says, okay, this is October, this is how much money I've made, this is how much tax has been taken out, how much am I going to owe? Then what else can I do? Maybe there's some other retirement options. Maybe I could do something with my IRA. Maybe I could go into some other non-traditional IRA accounts. Maybe I can do some charitable giving, doing some Salvation Army, lots of different things, paying my mortgage interest, my mortgage payment in December that's due in January. Maybe there's a hobby that I have that really is going to turn into a business, and I really want to start, again, income productivity, to do something to generate some money that's going to, right now, generate some deductions for me as a sole proprietor as well.
So Derek, what you're saying is that there are some things that we can do to generate more, I guess, what is it? Is it justifying the money that you spend? Or is it, because are we talking about, because I'm confused here, are we talking about saving money or spending putting money in different areas where you pay less tax?
I think we're doing a little bit of both, but
Okay.
it's all about planning. And again, it starts at the beginning of the structure of the foundation about income production.
Okay.
So you know where you're going to make the money. You know how much tax you're going to have to pay on that, maybe 15%, 30%. You're going to set that aside. And you know the difference between your expenses and your income. Let's say you have a business and you need to buy some new equipment. So is there a tax incentive that I'm going to be able to write off that whole piece of, that new piece of computer that I want, or that new cell phone, that iPhone 6, is that going to be a deduction? Is that $300 or $600? Or do I finance that with credit? You know, all these are different things that you should have these conversations with yourself, with your accountant, and your tax person.
Now, what is the difference between the accountant and the tax person?
Well, the accountant is pretty much just giving you the financial performance. Hopefully it's going to do the comparison between, or the reporting about how much you made, how much you spent. And they're going to pretty much give that to the tax person. The tax person can also work with both ends. I have some people that I do their monthly accounting. I also do their tax returns. But it's great if you have it a little separate about commingling funds, or less arguing and things of that nature. But the tax person's, my role is to be sure that you're paying the least amount of taxes prescribed by law. I'm going to tell you what the tax rules are. I'm going to speak to your financial advisor to say these are the proposed changes that are coming for 2014 that, for example, there's some things that are going to expire at the end of this year, 2013, that would have an impact when you're filing your tax return next year. So we would look at all of those legislative changes. The accountant is not really the tax guru. They call us kind of geeks at times, but we look at the different strategies that are in place for taxation. The accountant is just giving you the nuts and bolts of what you're making. But also, as a team, you're talking about, again, I just keep coming back to this income production. What is your budget? How much did you project that you were going to make? What's that variance? I didn't make $1 million, I only made $750,000. What can I do to make up that difference? Or I didn't make $500,000. I see that as a role of the accountant, per se, or a financial manager. And then once all that information is presented, or in the team, and we're talking about it from the tax standpoint, what are the tax implications of these decisions?
So your suggestion would be is that a person really needs both of them.
Well, they should shop around, find someone that they can see, someone that they feel comfortable with, talk to them, see what their comfort level is and what the person's knowledge level is. Someone could be very strong in accounting and not know anything about taxes. I present, I think, the best of both worlds.
Okay, well, now that you've told us the difference, it sounds like we really need both of them, whether we find them in one person or whether we find it in two. It's definitely sounds like it's necessary.
It's a conversation that needs to be done.
Okay.
Because how many times have you heard in some of these recording artists, not to be stereotypical, that they're making all this money on the road and they didn't know that they owed taxes?
How does that happen?
Well, you know, I can't say I wasn't in their shoes, but I think there's a disconnect where you've got someone else managing their assets, managing their affairs, writing their checks, paying their bills, but they're not filing their tax returns. Again, this is something I think is very critical about educating yourself and planning, feeling comfortable with who's on your team, and trust.
But Derek, okay, so I'm the artist, and I just put everything in your hands, and I just go away. I just keep on singing and dancing and stuff. And then I go to jail when you don't do what I paid you to do.
Correct. Well, you both go to jail.
Really? Both
You
of
can
you?
be sued, and I out of confidentiality, I won't talk about the famous artists that have sued the accountants to do that.
I didn't
And-
know they could. I didn't know you could sue them. I thought you just went to jail and that was it.
Well, again, I think the importance is talking about it, knowing about it, and keeping abreast of it. You know you're making $1 million. You want to see those reports. You want to see those tax returns. You don't want to just always be on the road. And that's why I tell people when we are signing the tax return, let's go over each line item. This is the amount of money that you made. These are the expenses that you incurred, and really teaching them and having the conversation about what your activity was. Now, it's not really my place nor my business to say, well, you didn't make $1 million and you said you were going to make $1 million. So, but we can have that conversation subtly. Let's discuss that variance. Or where are your royalties, or for your speaking, all of these things, And I don't, there's just some people out there that are takers. But that's
insane. I mean, so it's very important because what I heard was if you are in the business of entertainer, athlete, whatever, if you don't have a good tax person and you don't have a good accountant, you could find yourself in a lot of trouble. So you need to shop for an accountant and a tax person and ask questions and interview. I mean, you really need to do your homework.
Absolutely. And you not only just interviewing.
You know how we do it. We just get it. Pookie and them said it was okay. We just get what Pookie and them use.
But even the recording artists and the contractual obligations they have with their recording companies, there's contracts that they have to, have attorneys involved. But there's just has to be a team environment, a team concept, a team conversation going on.
Well, I tell you what, at the end of the show, they have your tax talk information rolling.
Yes, I do have a free website that you could sign up for. It's taxtalk.net.
Great.
We're always talking about different topics for taxations for sole proprietors, individuals, partnerships, corporations, S corporations. So I just got to get back to finish up these tax returns before midnight tomorrow.
You'll come back again, right?
I will.
Good. That's all we have for tonight. Thank you so much. And Derek, I hope to see you again. Thank you so much for coming.
Thank you for coming. Thank you for having me.